sponsored by the Securities and Exchange Commission of Nigeria.
Hello, I'm Wale Famrewa and you're watching Eye on Nigeria's Capital Market, the show that casts the spotlight on West Africa's oldest and largest stock exchange and, of course, the broader capital market. All right, an interesting fact check for you. Almost 30% of all business combination and conversion approved by the Securities and Exchange Commission in Nigeria since 1982 have been approved in the last 2 years. Now, this statistic reflects the growing trend that we're seeing in Nigeria, where more local and foreign investors are looking to deepen their presence in Nigeria by exploring mergers, acquisitions, restructuring, and other corporate business combination and conversions. So on this episode of the program, we explore what is driving this level of interest in Nigeria's market and, of course, what is to come.
In the last 30 years, what we have had been mergers, acquisitions, takeovers, and of recent a lot of restructuring because of the banking, the review of the universal banking. There have been some measure of increase, and they are largely related to the banking sector divestment from the non-core banking subsidiaries. And then, of course, we also have a lot of applications related to the flour mills and then the brewing industries.
The history of business combinations and restructuring in Nigeria can be traced to the 1970s, as several mostly multinational companies in the country did deals that were essentially linked to happenings offshore.
You know, the first M&A deals in this country were done approximately 40 years ago. You had a period from the late 70s through out the 80s, you know, where a lot of merger and acquisition activity in Nigeria was driven, you know, primarily by international transactions. So, you know, Lipton's doing something with cheese ponds provoked a transaction in Nigeria. Unilever being unbundled provoked a transaction in Nigeria. And the first sort of slew of activity that we saw was transactions of that nature. Then we went, you know, past 2000, and we began to see regulatory-led transactions.
The requirement of the CBN that banks bring up their shareholders' fund from 2 billion to 25 billion, you know, really spurred up a lot of banks, you know, to come together. In some instances, you have 2 banks, some as much as 8 banks came together, consolidated. And then you also have the insurance consolidation in 2007, where a lot of the same pronouncement was also made in respect of insurance companies to show up their share capital. And a lot of them came also merged. You have them merging in various capacities.
Prior to consolidation, it was typical to see one M&A deal every year. If you didn't work, for example, either inside of NAL or FCMB, you know, or, you know, later IBTC and then, you know, Denham Management, you'd never been near an M&A transaction.
In different factors that have driven activity in different sectors. And if we start with the banking industry, for instance, we are all aware that in 2009, there was a regulatory intervention that resulted in about 1/3 of the banking sector being found to have breaches in liquidity, capital, and governance. And we saw a fair amount of M&A activity on account of the CBN's intervention, with FCMB acquiring Finbank, Access Bank acquiring Intercontinental Bank, ETI acquiring Oceanic Bank, and so on.
I think UAC itself is a product of M&A, so I won't go into that today, but I just mentioned that we've done some taken a position in CAP. CAP PLC is a paints manufacturing outfit where we've taken 50.2% equity stake. They offer Dulux in Nigeria. We've also done Grand Cereal in Jos, one of our companies that's producing poultry feed, fish feed, and edible oil and cereal meal. We took 64% there. And we've also done Swan, which is Spring Waters, Nigeria. Just a few of them that we've done. In between, of course, there have been some divestments.
More recently, regulatory-driven mergers and acquisitions in Nigeria have been seen in the pensions industry, where new capital requirements have forced a few deals. Also, with new regulations in 2011 forcing banks to divest their holdings In non-core banking subsidiaries, a flurry of deals have been seen involving insurance and stockbroking companies. But an exciting fresh wave of transactions is now driven by other factors.
But I would say that over the past 12 to 18 months, what we're beginning to see more of is an increasing amount of cross-border activity where companies, mostly from Southern Africa, also companies from Europe, are beginning, to look at the market, recognize the opportunity, be able to understand and dimension the risk better, and want to make more, acquisitions here.
Most of them are coming from South Africa, to invest in various industries in the Nigerian market. You have them a lot in the milling industry, and you also have them in the brewing industry. That you have Alexander Forbes that invested in an insurance companies, and then you also have those foreign companies that came and took over the GT insurance. The core investors that invested in the GT insurance, that is the subsidiary of GT Bank.
And it's on account of Nigeria's socioeconomic makeup, with about 45% of the population below the age of 15, GDP per capita that has quadrupled from about $300 in 1999 to over $1,500 today. And that has caused Tiger Brands to be very acquisitive in Nigeria, acquired Deli Foods from a PE fund, Aureus. Recently did a big deal with Dangote Industries, acquiring Dangote Flour Mills PLC. And I think the last one they've done is they did a deal with UAC for UAC's food business. SAB Miller has been very acquisitive. Heineken has recently acquired certain breweries. And we've seen Diageo announce greenfield investments in Nigeria as well. One of the biggest ones was the creation of Dangote Cement PLC. That was a merger between Dangote Cement PLC at the time and Benway Cement Company PLC, and that was about a $13.5 billion merger. Another public transaction was the Access Bank merger with Intercontinental Bank. And depending on how you slice it, the capital injected by Access Bank into Intercontinental Bank was about $500 million. And if you think about the combined entity, then you get significantly more than $1 billion in value for that particular transaction.
You're also seeing within country entrepreneurial Nigerian businesses taking a look at their business, recognizing the opportunity either to build market share or to build a new offering and beginning to do combinations there. So if you ask me, I would say that over the next 5 to 10 years, M&A could well become, the most interesting transaction opportunity for us as advisors.
We've seen a situation in which there's increasing sophistication amongst the corporate environment, where people don't feel I have to own my own company, and are a lot more open to partnerships that would strengthen the overall corporate and allow it to stand a better chance of growing profitably in the future. We've also seen an increasing theme of globalization, companies expanding beyond their own borders, seeking profitable growth. In the oil and gas industry, we've seen an increasing move towards indigenization that has been supported by legislation. We've also seen international oil and gas majors divesting from their onshore assets, and that has also triggered some significant M&A activity. FHN acquired Wema 26 from Shell. We just heard the recent announcement of a reasonably sized deal by Shoreline Natural Resources and Heritage Oil, acquiring OMR 30 from Shell. And I think we're going to see a lot more of this type of activity.
An example of a company that has explored mergers and acquisitions recently is UAC. This company has signed deals to acquire a local company and also partnered with new investors from South Africa.
What we've done is we created a company, UAC Foods Limited, and 3 of our operating businesses in the food sector. We moved those 3 businesses to the company, and we asked Tiger Brands to invest 49%, and we took the balance 51% stake in that company. What we've done is to combine our skills. UAC has operated in Nigeria for a very long time. That long operating experience, combined with Tiger's branding and technical expertise, should produce a company of the future. We've announced that we are in discussions with Livestock Feeds, a local poultry feeds manufacturer. We're also in discussions with Portland Paints, local paint manufacturer that is operating in the marine coatings and media sector of the paint market. These are two local transactions, but in addition to that, we're also having discussions with some strategic investors into logistics business, as well as the quick service restaurants.
Corporate restructurings, generally including mergers and acquisitions, leverage buyouts, divestitures, and other forms of business combination are really, really critical to strengthening our real sector and making Nigeria more globally competitive. If we look at what has happened in the banking sector, but these banks could essentially take on the world. A number of banks today have very, very successful businesses in other parts of Africa. So one thing that mergers and acquisitions can do for us is strengthen the real sector.
One of the reasons why we've had a very busy last 3 years has, oddly enough, been, in my view, because of the decline in the values of securities on the stock market. Because for M&A activity to thrive and take place, you need to agree at a valuation that is fair to both the buyer and the seller. And where you have a frothy market in which the prices of companies are too expensive, then you find that buyers stand back. So I think one of the key drivers of current activity is that valuations have come to more reasonable levels.
The fact that market is also improving helps. Clearly, when equity markets boom, then that becomes a stronger currency for potential acquirers to target their deals. So what we've seen in 2012 in particular is because you've seen the large caps sort of diverging valuation relative to small caps. That kind of incentive sort of arises naturally, where the big guys are looking to expand scope in terms of scale, in terms of scope, trying to pursue opportunities, find some kind of benefits in using that opportunity to sort of target the smaller operators.
So the last 2 years have been quite exciting in terms of M&A activity in Nigeria. After the break, we take a look at what to expect going forward, and of course, what are the key challenges or constraints that may hinder deal flow in the future. More eye on Nigeria's capital markets coming.